Everyone's talking about a market crash again. You hear it on the news, you see the headlines, market teetering, retirement accounts in danger. That fear is everywhere. But what if? What if there's another side to this, a surprising counter-narrative? What if this next downturn, the one everyone dreads, is actually an incredible, maybe once-in-a-generation opportunity for some, specifically Gen Z? And maybe, just maybe, at the expense of boomers.
That's definitely not the mainstream take.
Exactly. It's not what you hear typically, and that's precisely why we're digging into it today. Welcome to ZED-Ed TV. We try to cut through all that noise, get past the panic and really pull out the key insights from the analyses we look at. Today, we're exploring some really thought-provoking ideas about market volatility and, well, how it might impact different generations.
A fascinating lens to view it through.
It is. And to help us make sense of it all, connect the dots, we've got our expert guide here. So the analysts we've been reviewing, they've laid out a pretty bold prediction. It's about who really stands to gain and who might face some serious challenges in the next economic downturn. Where do we start unpacking that?
It is compelling and, like you said, often overlooked. The usual story around market downturns is just, well, negative.
Yeah.
Especially for personal wealth. But these analyses, they paint a very different picture. They suggest a huge redistribution, really.
Redistribution of risk and opportunity. Is that the idea?
Exactly. That's a great way to put it. Risk and opportunity shifting between groups.
Okay, let's start with the risk side then. These analysts are pretty clear. They see significant market instability coming, potentially. According to their work, who do they see as, well, most exposed if things get shaky?
Their focus is definitely squarely on the boomers, born between 1946 and 1964.
Right.
The analysts point to this really striking statistic. Boomers currently hold over 50% of the nation's total wealth.
Over half.
Yeah. And this isn't just like current income. It means their retirement savings, their assets, their homes, their future security is deeply, deeply tied to how the market performs. Their exposure is just immense.
So any big market move,
Yeah.
it hits them directly.
Profoundly, yes.
Yeah.
Especially a severe downturn.
And the scenario these analysts are talking about, it's not just a small dip, is it? What kind of scale are they suggesting for a downturn? And what do they think the reaction might be from boomers if asset values drop like that?
No, they're not mincing words. They talk about a major correction, maybe 30 to 50% down across housing and stocks.
That's huge.
It is. And their analysis suggests that if faced with that kind of drastic drop in their net worth, many boomers might feel they have to sell, like a panic sell situation.
Protect what's left.
Exactly. Protect what they perceive is left of their retirement funds, other assets. But ironically, that action could actually make things worse for them.
How so?
Because selling into a falling market,
Yeah.
you just lock in those losses, right? You remove any chance of benefiting from a potential recovery later on. And this, the analysts say, this is where the kind of surprising twist starts to come into play.
So trying to save themselves could actually deepen the losses. That is quite a twist. Okay, but then the analysts pivot. They suggest Gen Z might actually be positioned to win here. How does that work? Why do they think Gen Z has less to lose?
Yeah, they make a strong case for Gen Z's unique position. Many in this generation, they don't own homes yet, right? Or they haven't built up these massive investment portfolios.
They're earlier in their financial lives.
Exactly. So unlike boomers who have significant existing assets on the line, Gen Z just has far less direct exposure to those initial market losses if things crash.
So less to lose from the start.
Precisely. And the analysts frame that, kind of paradoxically, as a major advantage. Not having much to lose means they don't see that immediate huge hit to their personal wealth.
That really reframes it. Okay, so if Gen Z has less to lose from existing assets, how do the analysts suggest they can actually build wealth when markets are crashing, when everyone else is feeling the pain? What's the strategy there?
Okay, this is really the absolute core insight from their analysis. It's that real wealth, fundamental wealth, is often built during recessions, when assets are effectively on sale.
Buying low, basically.
Exactly. They stress that the real opportunities pop up when prices are at their lowest, not when everything's booming. And they point to history, right?
That's what?
Well, think about buying Amazon stock back in 2001 after the dot-com bust when people thought tech was dead. Or investing smartly during the worst of the 2008 crash. Or even, getting into crypto after the big correction in 2018.
When everyone else is scared.
Right. Those periods when assets were super cheap, those were the moments for incredible long-term wealth creation. And the analysts argue Gen Z has this crucial advantage.
Time. Time for recovery and growth.
Loads of time. Time for those on-sale investments to not just recover, but grow, potentially exponentially over the long haul. That's a luxury older generations nearing retirement just don't have. What makes this potential recession maybe unique for Gen Z is that starting position. Low assets, long horizon, maybe fewer fixed ideas about investing.
So it's the combination.
Yeah.
Cheap assets plus a long runway for growth. Okay, but what do the analysts say Gen Z actually needs to do to grab this opportunity? It can't just be about being young, right?
No, absolutely not. They really emphasize that being young isn't enough on its own. The analysts stress the critical need for, well, education first. Understanding markets, investment principles.
And knowing what you're doing.
Yes, and then discipline. Sticking to a plan. Yep. And, crucially, having the courage, the nerve to actually act when everyone else is freaking out.
Buying when there's blood in the streets, as they say.
That's the idea. They frame this period as Gen Z's window, a real shot at significant wealth creation. But it needs active participation, a strategic approach, and, yeah, the conviction to buy low. Even when the headlines are screaming doom, they're basically saying, don't just sit there, do something.
That's a powerful call to action. But there's another layer the analysts bring in, isn't there? Something bigger, maybe more predictable, that they say will amplify this whole thing for Gen Z, the wealth transfer.
Oh, absolutely. They project an unprecedented transfer of wealth. I mean, the numbers are huge.
What are they talking about specifically?
Their estimate is, get this, over $68 trillion is expected to move from boomers to millennials and Gen Z by around 2035.
68 trillion. Wow.
It's enormous. This isn't just a minor adjustment. It's a fundamental shift in who holds the bulk of the nation's financial power.
Okay, so connect that to the potential market crash. How do the analysts see those two things interacting? Is there synergy there?
Yes, that's exactly what they suggest. If you connect this to the bigger picture, the analysts think this massive wealth transfer will likely be happening right as asset prices potentially hit their bottom after a crash.
So inheriting or receiving money just when things are cheapest.
Think about it. A younger generation gets a significant capital injection precisely when investments, stocks, real estate, whatever, are at bargain prices. The analysts literally describe this as a perfect playbook for younger generations.
The ultimate buy low scenario.
Exactly.
Yeah.
Enabled by both the market cycle and this huge generational shift of capital.
Which brings us to what the analysts call their controversial hot take. They get pretty direct about Gen Z's role in this, don't they? What's their blunt assessment?
Yeah, it's quite blunt. The analysts basically assert that if Gen Z doesn't come out significantly ahead financially over the next decade or so, it will largely be because they failed to take this opportunity seriously.
So the onus is on them.
They're essentially placing the responsibility squarely on the younger generation to recognize what's happening and actively chase this unique set of circumstances. No excuses, basically.
And they contrast the conditions, right? What boomers had versus what Gen Z has now. What did they pinpoint as Gen Z's unique advantages that they think are maybe even more powerful?
They do. They argue that, okay, boomers benefited from things like stable pensions, much cheaper housing historically, and generally rising markets for a long time. Real advantages.
I mean, what classic narrative?
Right. But Gen Z, the analysts argue, has something different and potentially more potent today. Knowledge, apps, and access.
Knowledge, apps, and access. Explain that.
They mean the sheer amount of information available instantly, combined with user-friendly investment apps on their phones and direct access to global markets. This is a toolkit previous generations just didn't have.
So information and tools versus, say, pensions and chic houses.
Yeah, and it raises this really interesting question. Is that immediate access to information and powerful tools actually more valuable today than those traditional advantages? The analysts seem to think so.
Okay, so how does having knowledge, apps, and access actually change the game? How can Gen Z leverage that in a way that's different from, I don't know, a boomer buying a mutual fund 30 years ago?
Well, the analysts argue it enables a level of, agility and individual control that just wasn't possible before.
Less reliance on gatekeepers.
Exactly. Instead of going through brokers for everything or having limited options, Gen Z can research, analyze, and execute trades almost instantly, right from their pocket.
Much faster response.
Allows for a much more direct, informed, and rapid response to market opportunities. Bypassing the slower, sometimes opaque processes of the past, it's about being able to participate directly, strategically, not just passively saving.
And do the analysts offer any proof that this mindset shift is actually happening, that younger investors are already using these tools differently?
They do, yeah. They point to how quickly and effectively younger investors reacted during the market dip in 2020 as key evidence.
What specifically?
Well, the rapid engagement with things like meme stocks, you remember that whole saga. Also, the big surge in crypto investments and just the widespread adoption of platforms like Robinhood.
Right, the GameStop thing, all of that.
Exactly. The analysts argue this shows a fundamentally changed investment mindset. It's characterized by, agility, a willingness to jump in, and an ability to quickly understand and use new financial tools and platforms. It's definitely a departure from the more traditional, maybe slower investment styles of older generations. Shows a different comfort level with risk and tech.
Okay, so let's try and sum up the core attention here. These analysts are painting this picture. The next big market event could mean significant losses for boomers, but kind of paradoxically, it could be this unprecedented opportunity for Gen Z. It's a challenging thought, for sure.
It really is. And it definitely makes you think beyond just the dollars and cents, doesn't it? Well, if this potential wealth realignment does play out like the analysts suggest, how might that fundamentally reshape not just personal finances, but, broader things like societal power structures, maybe innovation, generational influence, looking out over the next few decades, even regardless of exact economic conditions?
Deeper societal shifts potentially following the money.
It could trigger some profound and lasting changes. Something to consider.
Definitely a thought-provoking question for you to chew on. We really encourage you to think about your own position, your perspective on these generational shifts and economic possibilities. And now, we really want to hear from us. Based on everything we've unpacked today, do you think Gen Z truly has it harder? Or maybe they have an unexpected advantage compared to boomers when it comes to building wealth in this changing world.
Yeah, what's your take?
Let us know in the comments below. We genuinely value your insights. We read them all. And hey, if you want to stay well-informed, make sure you don't miss future discussions where we break down complex topics like this one. Please do like, subscribe, and share ZED-Ed TV. Share it with anyone who needs to hear this perspective.
Absolutely.
We'll be back soon with more insights.